Hi everyone. How are we today? It is. Well, I gotta get the audio out of here. Always forget to do that when I listen on two machines. Okay, let's get that image out of the way. Put some charts up because that's why we're here. Welcome to Market Kickoff. Starting the week, we've got a lot to talk about. It's been a pretty crazy week last week. I want to talk about a couple of macro things, some things that are really going to shift the market a bit, and so that's super important for me to get across to you. So, a couple of big things, and let's talk about what's going on by taking a look at our Topstep charts, and we'll go to micro Bitcoin. And if you've been looking at this chart, it's had a rough go over the weekend, right? This thing continues to trade. It trades constantly sitting down at 95. This is what happens when liquidity leaves the market. And so you might say, explain that to me. So those of us that are traders and sitting here tonight, we come in different levels. We know different things about the market and so on and so forth. For me, I'm sort of a macro junkie. So I'm always reading the news and trying to study what's under the covers. And so a couple of things I just want to share with you that I think is pretty important for us to know as traders. The only reason that markets actually move up or down significantly are because of increased flows, right? And we saw 2021, 2022, a lot of retail trading pushing the market up, but indeed institutional flow who had been short, so many of those instruments had to buy to cover. And so institutions really are an anchor point of what's moving. Sorry, I've got a tickle on my nose, and I think it's a strange hair, but let's hope it's not growing out of my face. I'll be the market kickoff lady with the beard. Sorry, that is terrible vision. I hope never to grow a beard in my old age. Okay, back to business. You never know where my mind's gonna go. So what we are seeing with this Bitcoin moving down is liquidity leaving the market. It means that people are ringing the registers and they are taking funds out of these instruments to deploy them in other places. And so when that happens, we're going to see drifts down. And many of us who trade other things, like maybe we have Topstep accounts, but we also trade, some little poo coins, as it were, or we trade little nano stocks that are $1 or $2 or $3. You should have noticed a big drain on those this week. And also the Mag 7 has been pulling back significantly, and that's putting a drain on the market. That being said, we are set to open Beardo. That's got to be my new nickname, Beardo. What Bloomberg is telling us this morning is that the Nas is going to be fractionally up, and the S&P is going to be fractionally down. Someone said something in the chat, I was reading it before we started, said, hey, do you think some of the relief because of, XYZ, I think they said something about funding for food and that sort of thing. Do you think that's going to lift the market up? Listen, market is about institutional flow, and what we hear with noise is always going to come down to that. It's just media noise and flow coming from that. So last week, the big media noise was really, wait a second, maybe these AI investments are a little bit hot and heavy, and they are not going to be able to make earnings. That's pretty possible. And so a lot of the drag that's coming from AI is sort of putting a question mark. And the one thing that the market does not like is uncertainty. That's really, really important. And I know I joke around a lot, but the market is really serious business. And the things that make the market go, is, wait, what about XYZ? So we had the administration, the president particularly, say, hey, listen, 50-year mortgages, 15-year car loans, assumable mortgages. Assumable mortgages are not going to be good because of a carry trade. You can't take a mortgage you have now and take it someplace else. It would only be a brand new mortgage, unless, of course, you made the length of the mortgage as you carry it, you cut it in half, which none of these things that have been floated are good ideas at this juncture. And, we're addicted to spend. Can I buy $200 a month more of house with a 50-year mortgage? Just learn to live with less. I mean, truly, it is the best way to move forward. We're just incredible consumers. We just have to cut back. But anyways, that's all that's sitting there. Let's widen out the frame. And for those of us taking a look at what Bitcoin has done, it's really in a rough spot. Now, I suspect Bitcoin heads down into the 75, but this is a big spot that I believe the traders are going to try and buy off of, this 95,000 area. Let me see if I can pull up my gamma flows to see. Here we go. Wow. The put wall is down at 90,000. And so that gives the put sellers a little bit of cushion. My thought would be, if you're keen on trading this, they're going to try and bounce, but momentum is very negative. And that will likely give sellers another shot. But a bounce into 97,000, if it fails there's going to be more downside. I think there's going to be more downside no matter what, right? It's just a liquidity event. It's going to drop. People are going to run and scatter. And then when everything's way down, then people are going to come in and buy. But the market has got to take a breath. And I know we don't really think about those things that way, but it really is the truth. The market does need to ebb and flow. So let's talk about getting the trade set up for the opening range. This comes about in the space. We're going to have an opening event. Some people like to use a 30-minute candle. Some people like to use a 15-minute candle. The fact of the matter is, the opening candle is incredibly important to have an eye on. Take a look at this. On Friday, this was Thursday evening, this was the opening candle. This 30-minute candle here was the opening. Look at where we closed. Essentially unchanged. So, but look at the motion. Who can hold a drawdown like this, right? Let's say you're thinking, hey, I want to make a couple of points long or short. You could have done just fine if you'd done either thing right here, except the drawdown would have been monstrous. So I like to look at this, and I would love for you to say, you know what, I'm going to take a look at that. I'm going to see how well that works. I think it will serve you very, very well, and it'll help you understand price flows because they are not arbitrary. I know people go, what? But they aren't. They are not arbitrary. Big money and big hands simply move back and forth through the day and that's the way that it sits. All right, so as we open, we look to be a little bit negative, so we might gap to the base of this edge, but let's look at the biggest candle of the day. That was the beginning. We're going to anchor a VWAP right there. There's our anchor tool in Topstep X. And we're also going to take a look at the last 30 minutes of the day, and we're going to anchor that there as well. So we're going to have two lines. The slope of those lines are positive, and the slope of the overall trend here is positive. So what we're expecting is the dips to be buy zones. Listen, we're in a huge buyback event. That's number one. Billions of dollars in buybacks are occurring between now and the end of the year. That's what causes the Santa rally. And sometimes they get done early and they don't do it into the end of the year, and then that's why that misses, but that's what's happening. So we have all these buybacks coming in, and so there's an upward draft. We also notice, if you took a look at this, last week Friday versus day before, 2 days before yesterday, or day before yesterday, day before yesterday, Friday, and last week Friday, they bounced in the same place. So this tells us that we've got some sort of sideways chatter going on in the market, and buyers are still very willing to buy the dip. Now, you might go, why? If things look the way they look, or whatever, whether you're bearish or bullish, or wherever your thought is about where we are in the world writ large, you're going to look and go, well, how come we've got this bounce here? Again, all about liquidity flows. As I mentioned last week Sunday, even though we were on for just a little bit, portfolio managers really behind the curve. A lot of them are underperforming the S&P, and so they're going to buy the dip. And so there's going to be a pervasive dip under the market, but volatility is beginning to expand. So when volatility expands, what it does is give us these savage moves, right? So let's get the put wall and the call wall set right for the E-minis. All right, our call wall for the 0 DTE, 6,900. The put wall for the 0 DTE, 6,700. So we've got this one at 6,700. It's moved up. Oh, no, moved down. Sorry. 6,700 from last week. And the call wall is the same. Yeah? 6,900. So what does this tell us? This tells us that they are preparing for more downside pressure while keeping upside pressure bounded. So we aren't quite in the space we're going to run next Sunday when we get together and we go, all right, what's the call wall and the put wall? We'll see whether we have to move the call wall up and the put wall up, or just only one of them moves. All right? So that's super important for us to remember where those are. Many of us trade the NQ. Let's see if we can get that on the road, because we will start trading in whoopsie daisy. What do we got going on there? Let's get our show on the road here. All right. So let's get our put wall set up, and we'll go ding ding. Woo. All right. There we go. Wow, those are tight. The 0 DTE put wall for the for the puts, we've got 24,700. There we go. All right, so it's moved down 300 points. Let's make that a little bit red, shall we? Yeah. And then the call wall is very close by. The call wall is 25,200. The call wall has also moved down. Very interesting. Let's make this green. Yeah. Okay. Now, let's go back to some of these questions. Make sure that that's a good idea, Coder. I don't mind doing that. I would like to, I'll float that to the powers that be, see if we can start at 5:30. I do like taking time to do the backdrop. These call walls for 0 DTEs, they move daily. They move daily. Yes, learn to live with less is hard, but you guys crack me up. All right, you know what? I will ask to see if that's possible. We don't know when that'll be, but in the meantime, let's just keep going forward. We just started, so it'll give us a chance to go through. Let's go to oil. And let's put those walls up. They've been really important. What? Oh, it's my pleasure. What's the strategy about puts and call walls? Yes, I will bring up the put walls and that for Bitcoin. I will show those to you. So let's go, because I have a very short attention span. So let me try and figure out what I'm doing first right now, which is oil. Let's do oil. Oh my gosh. Okay. For oil, the call wall is still at 61. Pretty important, right? Still at 61. The put wall, whoa, we're under the put wall. Put wall's at 60, also the same. It has not moved. So through the week, they've gone back and forth, but that put wall has remained steady. Indeed. We're in a slush bucket in oil. At some point, when the bullets start firing, we'll have ourselves a little bit of a rocket launch to the north, but not now. Now we're caught in a great big sideways pressure event. And that's why these call and put walls have stayed sort of stagnant. Our top step levels, listen folks, if there's one indicator that you put up on your chart every single day, it's the top step weekly levels. There's nothing like these to bring things to center and focus in. It's so very, very important. All right, let's do gold next. Let's see where the walls are for gold, and then I'll give you Bitcoins. Interestingly, the call wall, the 0 DTE call wall and the big call wall, that's weekly and monthly, they're both the same number. It's 4,200. Now, some of you know that I'm really pretty bearish on gold at this juncture. And that's because of all kinds of shenanigans going on. I suspect that gold has made its high for the year, but when I was talking with the gents last Monday, I said, hey, listen, first line in the sand we're going to have to get over is 4,072. And wouldn't you know it, that's where we're sitting right now. We're sitting there right now. We had a massive move up. Listen, this candlestick right here, someone, some entity, some group together went out to GLD, which is an ETF in the market, and they bought $96 million in a coordinated block of calls. They started the buying and it went just immediately into the market just after 9:30, and then it was all the way to the end of the day, and then they immediately started selling as they were coming in to the end of the day. By Friday morning, that entire $97 million trade was unwound, and it gave the market no floor. It's just collapsed into the natural mechanical floor that it's got at 4,070. So there's something going on here. We'll see what it is. I suspect, just flow. And a lot of people, a lot of institutions were very short gold. And as I mentioned several times, there are literally 8 times the derivatives into gold than there actually is physical gold. So this is a little bit of a financialized game. I don't know if it makes sense to you or not, but the bottom line is this number right here near 4,074. John's got the same number, that 4,074. That's an area they're going to battle and try to hold as a new floor of support. Okay, so let's get the call walls and the put walls up there. The call wall, 4,200. Let's draw 4,200 up here. Green. 42. Text. Call wall. And then let's do the put wall, the 0DT put wall. Wow, that's at 4,100. Deep put support is at 3,950. So let's look at the 0DTE for today. That's 4,100. Let's do it again. And now I'm going to explain. I did not forget about you, fine person who asked the number, who asked the question about what's the business with the call and put wall. So let's talk about that. These call walls and put walls define a group of traders that make money in a certain way. Now, I'm a big options trader. I trade a lot of options. And so the option trader will do the following. They will sell a call that's very far away, and they will sell a put that's very far away. Most option traders who make consistent revenue, which for me, it is a constant revenue stream. For me, I'm an option seller. I do not buy options, I sell them. And so these walls are created by the sellers of options. Many times institutional flow gives us these walls. And so the way you make money selling a call is you go, hey, as long as price stays under that one, I'm in good shape. And if you sell a put wall, you want price to be above it. So the area between the call and put, price can move all around. But as long as it doesn't breach this area and stay there, and as long as it doesn't breach this area down here and stay there, the call and put seller will make money. Now, what we've noticed in the NQ of times through the week, if you watch my video in the mornings, I also put it in the Topstep Discord, so you can see it there. A couple of these walls have been flipped around, and that's because the traders have been caught on the back foot. And one of those places that this has happened all week is Bitcoin. So let's go to Bitcoin, and let me give you the call walls there and the put walls. Okay, So here we are. I'm going to delete all these drawings here because they're annoying me. Okay, so the call wall is at 110,200. So we'll do that. And they change every day. So you want to be careful to look for it, but I show it to us every morning on the morning vid, so you can see them there if you're so inclined. So let's do the put wall first, since that's the color that we've got. The put wall is 100,000. So we are well below the put wall, well below it. So what does that mean? If you are under the put wall, it means you're losing money if you are short the puts. And that means you have to sell your Bitcoin so that you don't continue losing more money, because a put wall, friend, that's not put call, because as you sell the put, that's a bullish position. And so if you want to stay long while the market's tanking, you're going to lose more and more money. So what the folks will do is they'll go ahead and they'll sell the instrument, so at least they're making money on the instrument while they're losing money on the option. So let's do the call wall. That one is at 110. And then we should have about 15 minutes in the market. And that will give us a setup for some trades. All right. Let's see. Iron butterfly. Well, you could do an iron butterfly if you want, but yeah, I mean, you could, but I would say I don't love iron butterflies. I would rather do an iron condor, but that's completely off topic. So let's jump into the fray. Let's see what's happened in the last 15 minutes. All right. Here we are, building our candlestick. Look at this. Very interesting. Last 30 minutes of the day, we are underneath that edge. And we've got an anchored VWAP there. Okay? So your anchored VWAP is going to be the 1, 2, 3, 4. The fifth group, it says forecasting measures. You'll come down here and you use your anchored VWAP. That's really great. Take care of those sorts of things. Whoa. I just heard the market is open signal, so that's so weird. Yes, we know the market's open. We're tracking. So here is our first. That's Thursday evening, all day Friday, and now we're sitting here. To me, this looks a little rangy. Now, here's what we have going on. Now, let's use 15-minute candlestick. This is, that's the bigger volume event. Put it right there. This VWAP is kind of flat. This VWAP is up to flat. The market is moving into a fade. It gapped down in the early. Let's take a look and see where that gap came. First 5 minutes. First 1 minute, 2, 3, 4, 5. And then it recaptured yesterday's low. Now, what it's trying to do is recapture settlement. That's why we have this up here. It's a very important number. We have a tendency to gravitate towards settlement. I don't really know the reason why. Maybe it's to fill the gap, but we do gravitate in those regions very, very much. So that's certainly interesting. Here's our 1 minute formation. We failed the edge. So This is the VWAP from the highest candlestick of the prior day, prior trading day, that's Friday. So there are going to be people that are going to try and short this and stay under this zero area. For me, you could say, hey, I could scalp that, but there's really nothing giving me solid information about what the traders are going to do in general. I don't really like to trade a 1-minute chart. What I will do is look for what I always do and what I try to talk to everybody about is where is inventory accumulating? Now, I say this every time, but repetition is the mother of learning. And so when we take a look at a chart and we stare down the chart itself, remember, what is the job of a market? It's to facilitate trade, right? So, all right, I get the joke about the iron butterfly, the band, got it. So, when we're staring down a market, we know a market is there to facilitate trade. What do we have to have before we can trade? We have to have product, right? So how do we see where product is being accumulated? Now, in the futures market, we can accumulate product to sell and we can accumulate product to buy. We don't really know what these guys are doing, which way they're anchored, but we can tell that we've got accumulation. They bought in this box right here. And so we can spread it over here and we can see that they have gone from the bottom of this box to the top of this box. And over here, they broke through the box. And once they got back in the box, they're going to go to the top of the box. So the question is, well, what's next? If they break out of this box right here, and this is so great, Hoke was saying this to me, when there are gaps between areas of accumulation, and maybe I should color this a little bit more so we can see inside of what's going on. Let's make that a little bit stronger. When they break out and they move up candlesticks and then decide they're going to have another area of accumulation, that's acceleration and then more accumulation. Look at what happens here. When it falls, because of the opening tick, it just really, it really fell. So what trade is setting up here? In my mind, the trade that's setting up here is the bigger sideways trade that carried so much of Friday's motion. Right? Everybody sat in here. Everybody sat in here. So if I were a betting man, I would anticipate we would fill the gap and move up into this space. And then when we got to about 67.72, we could very likely sit around all evening, right? So my opening trade here is anticipating that they're going to come back and potentially hold this floor. I'm going to put these two up, sitting in that space. That's my setup. I think the dips are buys. I suspect we're rotating into the top of, see how these are brighter than this over here? This is the inventory event where we're sitting inside the profile. So these guys who are short, I expect they try to come in and sell. So I'm hoping they give me a chance to get to buy. Let's take a look at the NQ. And then we'll sit down and really answer some questions as we see them. And you guys can give me a hard time or whatever you're into doing, right? Cool. We're all good. I got thick skin. So let's take a look at this one. together. Okay. First open a candlestick. Wow, just like the ES, anchored VWAP right there. 30-minute candlestick formation. Right there. Oh, this looks quite different, right? This one's already breached. This one's already breached this first VWAP. So where is the accumulation here? I can't quite see it on that time frame. I think I see it here. So let's take a look. This is my accumulation box, right? Could be higher, could be bigger. You know, we might duplicate it, clone it, move it to the top, see if we've got a 2x. Yeah, we do, right? Breaks out of the box, moves just by the same amount, and then moves again. So, I would not be surprised if we try to get back up to the top of the box here. So, where's my trade? My trade is an entry here. I need to have a stop sell below there. And then here's the call wall for tomorrow. So what's the storyboard? We're very close to the call wall. The traders are going to want to force the price action below. It doesn't mean they're going to get to. They could always roll that wall up. Just like the put wall in Bitcoin, they're well below it, but trying to lift dramatically. So that's what we're going to stare down here. We're going to see, can they come in? What's this? Ah, that's an anchored VWAP from way back. So let's delete that. And then, yeah, we got a little bit of sideways action here for sure, right? If we have a box sitting right here in the last part of the day, and then resistance up here, I don't know that it's a bad idea to maybe, let's do this. Let's go to a 3-minute and see what's going on here. Big gap down, recovered the entire thing. The call wall is just above. What do the traders want to do? I think they want to short this. I do. I think they want to short this. This might be a good scalp, right? The problem with the short here is that we've got two VWAPs supporting the floor and all of this tiny inventory accumulation box sitting right there. So I'm going to go to the bottom of that. Whoops, no, I'm not. I'm going to hold this here, but I'm going to bring this down to see if I can hold it. So, FYI, entry point, potential 25,086, and then the stop, 25,060. We'll wait on that. Let's go to micro Bitcoin. As I mentioned, I said, hey, listen, the traders are going to try and hold these positions, right? They're going to try and get back into this 95 area. They're going to try and bounce it. Now, why did we do that? Because we looked at this great big picture and we saw all of this activity right here. The line that the buyers really need to get over, my friends, is this one. 96,000, because look at all this inventory accumulation right here. They've collapsed right through it. It was like it wasn't even there. And this is a daily chart. So this is pretty important. The traders just Over the weekend, they just fell through that floorboard. So it's my suspicion that there's a bounce in play here. Let's see if we can find it, though, to trade it, because it's not going to be a bounce for long. It's going to be one of those bounces that comes in and then completely collapses. So if you're thinking about being long, I wouldn't be long for long because of what the market is doing. All right, let me answer some questions here. Stay long, yes, folks, we're going way up. The market is there to take. The settlement is not the last close. Yes, thank you, Jay. I appreciate you being in the stream. Okay, so you can't find information about call and put walls on Topstep X. However, you can find them just looking in option chains, right? That's okay, I don't even know the name of my channel, folks. Hang on a second. Isn't that bad? That's horrific that I don't even know the name of my own channel. I think it's just my name, Anne Marie B. Let's see. That's terrible that I don't even know my own channel name. It's Anne Marie Band. ANNEMARIEBAIYND. I know, a lot of letters. Anglicized name, of course. Yeah, you can find me right there. Okay. I can't do it for the SPX on Topstep. So I can't do that. Okay, questions. Not casual. What's the institution's effort to do that with so much money? Blatant liquidity pump. Well, you know, it's all about making money. One day we'll be able to do those put walls and call walls. At this time, not so much, but I have to give credit where it's due. I get all my option data from Mentor Q. They're a really great company, and they have all kinds of information there. All right. Meanwhile, gold has bounced 40 points in 3 minutes. Let's take a look at gold. So here's what we know. We know how important this number at 4,070 is, right? Big number. Bounced right off of the floor. Where should it go? Now it's above the put wall, so the folks that sold those puts are like, all right, I can say SETI. They'll start trimming their shorts, which will be a buy to cover. The way, you know, you trim your short, you buy to cover. And now we've got ourselves something that looks a little bit like a stretch into heavy congestion. So let's take a peek at that. Let's set some stuff up. Let's see where inventory's been collecting. Got a pocket right there. Where is that anchored VWAP from? That monster move from the other day. I don't mind this. To be a little bit thinner. And then let's see how we're holding here. Biggest anchored VWAP. So here's a question. think with me on this. I think a lot of us just sort of passively sit around like, and what I want us to do is be more active in the space. Why do you think it might be important to anchor a VWAP somewhere? What are we actually doing anchoring a VWAP? Yes, price and volume. Excellent. Excellent. That's absolutely it. Now, why would we want to look at price and volume? That answer would be, I want to know who's strongest in the room. So, really what we want to do is hitch our carabiner to the belt buckle of the strongest person in the room, right? If it's a group, whatever. But we want to attach ourselves in the flow of motion in the direction of movement. And so that's why we say, all right, let me anchor a VWAP. Another thing we do is we say, all right, I know that in order to conduct trade, I've got to collect inventory. And so where might I see inventory being collected? This first pocket where everything fell out of bed so dramatically on Friday. This pocket gives us a floor. Now, I like to draw Fibonacci in these kinds of things, but I only use the 50% range because, as I've mentioned to you many times, that we traders are pretty simple-minded. We look to where the buying is and we go buy, and we look to where the selling is and we go sell, and then we look to where the selling stops and then we stop selling, and we look to where the buying stops and then we stop buying. Everything else is an overcomplication of the work. I mean that very sincerely. And a lot of times we overcomplicate things. Heavens knows I overcomplicate things all the time. And so one of the big things to notice is, well, where if they've been buying stuff, the 30-minute candlestick from Friday literally has every single print from the entire day sitting inside that first 30 minutes, with the exception of these wicks, right? Which they were testing the prior week's high and they've held it. Now, if you're bullish on gold, you might go, hey, I made brand new highs, and then I came in and now I've got last week's highs and I'm still holding the floor. Now, those are, of course, not the week's highs here. This is the actual last week. These aren't quite valid here. Let's take a peek. If we go to the day, last week's high would have been on Wednesday. And that would be now, that would be last week's high. So these levels aren't quite tracking. We'll get them there. They'll be up soon enough. So what we can stare down is where these traders are actually going here. If we can't get out of this box, see, for me, I don't want to trade gold if it's inside this box. Because what they're doing is accumulating inventory. So it might come to the bottom of the box and I'll try a long down there. Or it might go to the top of the box and I'll try a short up there, right? But I don't see any pressure here. Now, for some of us looking to scalp, and I've noticed a lot of traders are addicted to the scalp event because they can go in and in just a couple of minutes, they can make XYZ. Listen, I totally get it. Some days are great days to scalp, right? Some days are. If you want to look at this and you say, all right, what's going on? I think I'm bullish gold, if that's what you're saying to yourself, then draw a trend line. Make it easy. Draw a trend line. If it keeps going like this, you got yourself a nice trade. You could maybe buy the breakout here and then scalp it for 2 points to the upside. You can do that. Do I like to do that? No. It takes too much energy. I spend way too much time just thinking about too much for too many bits. You end up making 65 trades and, you're up $150 or whatever it is. It just is, for somebody like me, I'm just a little lazy, and I don't dig it, as it were. All right? If you want to do something like, I didn't even grow up in the 70s. I just like 70s lingo. I'm not going to lie. 70s lingo makes me laugh. So I do a lot of things to make myself laugh because I'm insane from trading for 25 years. Just saying. All right. Let's go down to some questions. Why would you not choose to anchor the VWAP to the largest bullish candle on the 15-minute to the right? You could definitely do that. You can do anything that you want with an anchored VWAP. Anything. So that's the beauty of trading in the space. If you say, hey, why wouldn't you put the VWAP here? Or why wouldn't you put the VWAP there? Or why wouldn't you draw a line there? All of it's reasonable if it leads you to a strategy that gives you consistent results. So if you take a look at anchoring and you say, all right, I know that Jay uses a 3-minute chart, and I suspect that he would like more time to move in the market before these sorts of things come up, but he would be looking for volume to accumulate someplace, and this 3-minute candlestick right here, if I were to say, hey, let me get rid of this VWAP. Come on. All right, if I were to get rid of that VWAP and then I just put a new VWAP, anchored VWAP, right here to this monster candle, that's something that essentially is telling me my trend line at this juncture is correct. So if I said, hey, I want to go long here for scalp trade, it's reasonable. Above the VWAP, above the put wall, above this, great. Where's it going to? Maybe 3 points away? Listen, it could go to 12 points. Absolutely. It could absolutely come back up into this ledge. It's reasonable, but that's how you would anchor that trade, right? Hey, I want to take a scalp. Okay, do I want to go long? Do I want to go short? All right. I've got this big candlestick up here. We're out of the top of that candlestick. I anchored a VWAP. It's the highest volume candlestick. I've got a trend line. I am, going to buy the dip, right? If, per happenstance, you said, and let's do this here. If you said, hey, I'm going long, and you take this position, here is the important thing to note. We literally have got, we've got, how many points of risk? We've got $3 of risk. So that's a minimum of $300 on a GC contract. if you're comfortable with that and you go, hey, for me, I will limit my loss. If I'm trading with gold, I will say, hey, I'm okay with up to $1,000 loss because it needs room on a regular contract. If I don't feel like taking that, I'll go to a micro and I'll trade 5 of them. But this would be something that says, all right, let me see evidence. 1, I'm above the anchored VWAP. 2, I'm above the highest candlestick of, the opening 10 minutes or so. 3, I have a positive trend line right here. 4, I have bullish momentum. So all of that tells me, hey, this is where I can do a scalp trade and I can say, all right, you know what? I'm just going to leave with $100 or whatever, right? If I want to hold for up at the ledge, that's really where I would stop this trade because I have no confidence in the fact that the chart will move all the way up to that upside, right? So that's your basic scalp trade. But that's the way you size it up. Now, if you have a couple of micros, you can sort of leg out of those things. But a lot of times, and I do notice this, it'll be the last thing I chat about tonight, I notice a lot of traders set up their trades on these very small time frames, but they're looking to make, I don't know, 300 points or whatever, right? You're looking for something massive when your setup is just built for this anchor event right here. Notice I close the trade up here where I saw resistance. That's the essence of a scalp trade. A scalp trade is, hey, buy support, sell at resistance. Notice this trade would be $100 underwater if I had let it run, right? But the scalp trade says, pay attention to what's happening in the tiny little brick that you're working on and don't sit down and go, okay, I'm just going to hang on and it's going to give me 150 points to the north when the formation is not telling you that at all. It simply is not. Do you know what I mean? That's super important. Okay, so thanks, Aaron. I appreciate that. Let's see what moves the market then. Willpower. The willpower of big money moves the market. That's all there is to that. The willpower of money moves the market. And it's big money. No matter what it is we're thinking, listen, I want to share this with you. We're playing a rigged game. It is what it is. Cool your jets. Don't get your knickers in a twist over that. It is what it is. Relax. Even though the market's rigged, we get to come in and play every day and scrape our money off the top and go to live another day. Just because the system's rigged doesn't mean we can't come to play. But it is not a level playing field. Big money has very deep pockets and they love fighting against each other for dominance. So the Goldman guys are going to have, they're going to know what the JP Morgan guys have got on their books and what they're planning to do. And they're going to fight against each other. And we're going to see big moves in the market. Right now, portfolio managers are still playing catch up. That's number one. So the deep dips are still going to get bought. 2, we've got billions of dollars in buybacks into the end of the year. Stock buybacks. That passive buying is going to lift the market continued to the north. It just is what it is. Okay? Second thing that's happening, gold. Tons of institutional desks are very short gold. They never expected this. Gold, they just, listen, one of my kids is a dyed-in-the-wool registered investment advisor, right? He's been in the business for a long time, and if you talk to him about it, here's what he says. Time in the market beats timing the market. And gold has never been a good store of value in a portfolio over the long haul. This is something they've been saying for 25 years, 40 years, 50 years, whatever. Gold really, I don't know. It's been a lot, right? And gold has consistently underperformed. So institutions are going to be short gold. And then there's going to be this massive underpinning because we have a fiat currency. So what a fiat currency means is a currency that is not backed by anything physical. It is only backed by good faith, right? That's our government saying, hey, listen, you buy a T-bill from us, and you can be sure this is going to hold, right? This will hold its value. No worries. That's what a fiat currency is. But we're spending ourselves into oblivion, so that's going to break, right? And so what are we doing? We're repatriating gold. Every single central bank in the world is repatriating gold, silver, platinum, anything physical. That's going to put the institutional managers on the back foot. If they're short gold, they're going to try and figure out a way to get around that. That's going to make gold very volatile. I suspect we see very large swings and just a general lack of confidence sitting with the trader of gold, who will then leave the market, and these institutions will be able to unwind all sorts of things. And then gold's going to go to the moon. So this is just my thought. Any last, where is my NQ take profit? Let's look at that. All right. If you are already long, a reasonable first profit would be the 0 DTE call wall. Right? Now here's what we notice. Wow, that's a huge spike in vol. In momentum, excuse me. Very big spike in momentum. Might be lagging. In any case, what we do see here in the 3-minute chart is accumulation. The traders are holding the floor above this resistance zone, but they're not headed higher. So in my mind, this is where I would raise my stop if I'm trading on a tight time frame. I would raise my stop right underneath the inventory line that's sitting right here. I would say, okay, if I'm long, I would move my stop 25,150, and I will see if it can continue to the call wall. But one of the most important things to look at, folks, if you're thinking about price action moving in your favor, and you're watching the accumulation of inventory, and you are not making new highs, and you're thinking about price action going higher, it's a place for you to be concerned about where to take profit. Okay? Yes, that's true about the debt. What is my... Oh, welcome. Zillaha. We're so happy to have you. Happy to have you to Topstep. Okay, anything else, folks? I love spending time with you, literally. I could see how I got to tell you, if you pay attention to only candlesticks, they will literally tell you everything you need to know about where price could go. And you can square away yourself from there. Any last questions? Well, Richard, I'm sure if that ends up being true, first of all, delighted that you're here. Delighted that you're here, Richard. But if you're right, we will be certain that you will tell us to let us know. I can count on you for that, and I actually am happy that you'll do that. So, could you explain again what a call wall is? What's my outlook for the coming week? High volatility, deep dips will very likely be buy zones, and big spikes will very likely be sell zones. I have a predictive seasonality indicator that I use inside of my live trading platforms. And it tells me that this week that we're stepping into will be surprisingly volatile. But at the end of the day, most stocks that are sitting in strength, again, not investment advice, folks, just telling you what I think. But by the end of the week, into the Thanksgiving area, we should see what price action is going to do, right? And in case you don't remember, we don't need to should all over ourselves simply because that usually leads to bad stuff. You don't want to do that. So, how do you calculate delta on the VPVR indicator? I don't know. I don't know that. I think we'll have it I think all our candlesticks are going to retrace each other in the next week. We're going to have an absolute mosh pit of price action, literally. It's going to be like your favorite evening from the 90s in slam dancing. All right. Listen, I have never slam danced. I have been in a mosh pit, and I have watched slam dancing and thought to myself, oh my goodness, who would do such a thing as slam dance? But, if you were into it, more power to you. I was just too much of a fraidy cat to do that kind of stuff. All right, folks. That's it for me. Went a little long, but I love spending time with you. I love spending time with the markets. The dips are going to be buys. If you want to trade it back to the upside, it's got some drift. We have some upward flows. The market could easily retrace, but I suspect for us to have, maybe Monday, Tuesday way up, Wednesday, Thursday way down, maybe Monday way down, Tuesday way up, Wednesday way down. We're just going to see a lot of noise. Okay? All right. Take care, everybody. I'll see you on the streams. Good night.